So Ashish is based out of LA. He's been there for some time. He will move back to India, and he will, in the next 2-3 months, he will do some CEO coaching or whatever. And then from October 1st, Salil will take him on as his mentee and prepare him for the role so that he can take on this role of managing a complex $20 billion company in a very transformational time. So I just wanted to let you know that Ashish will be the new CEO. And I'd now like to request Salil to say a few words about Ashish.
Thanks, Nandan. So first, welcome everyone. This is an incredible time for us. As Nandan shared, I've known Dash for a very long time, working closely with him. Huge congratulations to him in making sure everything he does works well into the future. He's had an amazing portfolio, the way he's built it, the way he's crafted it in terms of the clients he's worked with, in terms of the people he's worked with. And there's a tremendous set of opportunities from that onto the overall company, the learnings from that as we apply to the overall company. Ashiss Dash, also a very collaborative individual, working well with all of the various components within Infosys, and having been here for a long time, has made sure he's learned everything and also understood how all different parts of the company work. So huge congratulations to him, and looking forward to working with him as we do the transition over the next few months.
I now invite Jayesh to join Salil on stage to commence the quarter updates. As always, for this section, I will request one question from each media house. But with that, let me invite Salil for his remarks. Over to you, Salil.
Thanks, Rishi, and thanks, Nandan, for that. So good afternoon, everyone. Thank you for being here. Our revenue growth for Q1 was at 2.4% year-on-year and 1% quarter-on-quarter in constant currency terms. We had a one-time revenue impact of a client decision during the quarter. Our AI services revenue was 8.2% of overall revenue in Q1. Our large deals, 3.6 billion at 61% net new, operating margin at 21.1%, free cash flow at $955 million. Our earnings per share were up 15% year-on-year in rupee terms. We saw strong acceleration in our AI work, as I shared earlier, with AI revenues at 8.2%. This is growing at double-digit quarter-on-quarter for the last several quarters. With this momentum, we see long-term relevance of our services for our clients, which are all driven through AI. From our delivery team, over 80,000 employees are working on coding tools such as Claude Code or Codex or several others for our clients, for our work inside. We see strong traction across the 6 areas of growth, the new growth that we see in AI, our hexagon for AI strategy. We see client work, for example, in building agents for processes, work on data, modernization, and using coding tools. We are building a team of frontier engineers to support our client work. Our plan is to have 6,000 frontier engineers over the next few years. We have built a platform, Topaz Fabric, that enables our clients to get the benefits of AI while keeping the sovereignty of their own data within their company. Our clients are able to work with any foundation model, closed, open weight, or on the cloud, on their own servers. Our clients are able to optimize token costs, which has become very critical now, to make sure it's the appropriate for the type of work they're doing and not out of hand. Overall, we continue to see the macro environment remaining uncertain. With our Q1 results and a view for the rest of the financial year, we are changing our revenue growth guidance to 1.5% to 3% year-on-year growth in constant currency terms. Our operating margin guidance remains the same at 20% to 22% operating margin. Thank you. And with that, let's open it up for questions.
Thank you, Salil. We will now open the floor for questions. The first question is from Ritu Singh from CNBC TV 18.
Thank you very much. I know you've asked for one question, but if I may, Salil, you've given us a big news in this quarter. To begin with, since you speak about how you brought in, and, Mr. Nilekani spoke about how you brought in calmness at a time when, the company was going through quite a bit. Even now, you're speaking of this global uncertainty because of which you've had to, again, pull down your guidance as well. Why decide to leave at a time like now instead of perhaps, looking at an extension? I wanted to understand, and with the new CEO coming in, any mandate for the new CEO that you could highlight for us more clearly? And perhaps that's something the investors would also want to know. And then on the earnings, of course, the reason for this revision downwards, if you could give us a little more color on what you're seeing in the environment, where's the weakness, where's momentum picking up? Some of your competitors like TechM have been talking about irrational competitive pricing. Wipro's also, spoken about that a bit. So what are you seeing in the environment? And with a 1% kind of a growth in the first quarter, do we assume the second half will be meaningfully better if you're to reach that upper end of the 3% guidance you're speaking about? And just on AI, if you could update us, how the revenue is moving, is it proceeding as per, what your expectations were? Any updates you could share on that front as well as far as revenue contribution from AI is concerned?
So let me start with the first one. I think you had that question collectively for some time now. We have the answer. As I look at it, I'm really delighted with the role I've played here. We've taken the business, as Nandan said, from 10 billion to 20 billion. It's working very well. The digital transformation, now the AI transformation is launched. So I'm really delighted, working well with our clients and with an incredible team that we have inside. So that's what I would like to say on the first one. On the second, I think what we are seeing is an environment where a little bit sort of combining the third piece as well. AI services is growing extremely well. Double-digit growth, if you look at it like quarter on quarter, if you look at it over several quarters in the past. We see that those 6 areas that we have identified, like the process, the agents, the data, the engineering, all of those are working extremely well with our clients. So we are now looking at revenue growth in each of those areas. Our pipeline is even larger than the 8%, which is the revenue today. So we see good traction in that. Therefore, we feel there's a good long-term relevance of our services to our clients, because this is going to continue to grow as we look out into the future. Now, the question on the guidance, we had a one-time impact that I shared with a client decision. There are factors related to what is going on in the macro environment, which we talked about. There are factors related to the volumes in the quarter. But we look at the large deal number, 3.6 billion, 61% net new. So we see a lot of support in that. We see, I think there are 6 of those deals which are consolidation deals that we have been the beneficiary in, as an example. There are 4 deals which are just under the $500 million range, so just like a mega deal. So we see, really good traction. The pipeline there is looking good. So when we balance, we decided to look at our guidance in a different way. The upper end of the guidance was really based on if the macro was improving. We now see the macro, it may improve, but not at the level that we were thinking initially. And so that's how we really constructed the guidance. But we have tremendous view that this is a good place for Infosys to operate with AI the way it's looking. And all of the work that we're doing on large deals gives us continued traction.
None of those questions of why you didn't decide to stay on and what the mandate of the CEO is, and if the second half will be better. If you could clarify all of those points.
So I think, as I shared earlier, my sense is we've had I've been fortunate to have a tremendous sort of opportunity and what we've done at Infosys over the last many years, and having taken the business from about 10 billion to 20 billion. So it's been an incredible journey. And that, with the team we have and with the client work we've done, that's been a fantastic sort of an outcome. On the mandate, I think our AI strategy is well put together, and Dash has been part of that. So our thinking is, that strategy we want to execute on. Of course, there will be some things which we will look at in terms of fine-tuning, but that's a natural course of evolution. But the strategy is very well in place to make sure that goes into the next phase, making sure, the partnerships we have with the various models, the Topaz fabric that we built. Today, on AI, it's important that clients see that their own data remains sovereign to them. And the way we build fabric, it allows for the clients to do that no matter which model they're using. And so that's a very big differentiator we have, for example, in AI. The token cost, that will be an important factor, we think, in the future. And we have built fabric in a way that depending on the task you are using the foundation model for, it will use the right model. So you don't have to pay for the most simple task like an expensive token cost and so on. So we think we're in good position in that. In terms of second half, first half, I think we have the guidance for the full year. We expect the normal seasonality that will come. We're not expecting anything unusual there.
Competitive pricing in the market that some of your peers have spoken about.
Yeah, so maybe they are seeing that. You should check with them.
Thanks, Ritu. The next question is from Rishabh Shah from Money Control.
Salil, if you could tell us your biggest achievement and what will you miss the most, and what's next coming for you? On the performance, quarterly performance, how has been the TCV conversion? Because that's a worry that investors have, and the third question is, two of your peers have highlighted that AI revenue is slightly lumpy, and it could be 1 or 2 quarters post which you'll have to go and get those deals again. So is that something that Infosys is also seeing? Thank you.
So let me start with the second one. I'll come back to the first. I think the TCV conversion, we see a pretty good way of converting. Now, what tends to happen is, when you have a consolidation deal, the conversion comes a little bit quicker. When you have a transformation deal, it's a little bit sort of spread out. But that's the normal sort of conversion we see. We don't see that it's suddenly changed in the last quarter or couple of quarters or so on. Yeah. On the AI revenue, I think it's moving so quickly that it is a bit up and down in a quarter by quarter basis. So our thought is, that's why we're saying, look at over the last several quarters, we see that double-digit type of growth quarter on quarter. And we will see, sometimes it could be a little bit faster, but it's growing nonetheless. Meaning, if you look at the secular trend, we see that is pretty strong. And that gives us a little bit of the view that long-term, there's a relevance of what we are doing on AI for the clients. For me, I think I'm very focused on what we have to do here at Infosys. We have a lot of things to get done. I want to make sure we remain in the leadership position, we win in the market, we are leading in AI, and I get a smooth transition done. So that's really my focus. And after that, I'll see what else happens.
Thanks, Rishabh. The next question is from Mansi Dave from ET Now.
Hello, good afternoon, Salil and Jayesh. Nice talking to you. Salil, my questions are on client spending, large deals, and competitive positioning. So talking about the client spending, client budgets remain selective across industries. Have you started seeing any improvement in discretionary technology spending, or are enterprises still prioritizing cost optimization over transformation? Talking about the large deals, Infosys has maintained a healthy large deal pipeline. So how confident are you that these deals will convert into faster revenue growth? Also, every global IT company in today's pipeline. So how confident are you that these deals will convert into faster revenue growth? Also, every global IT company today is talking about AI. What would you say is Infosys' biggest competitive advantage in this AI-led technology cycle? And please start with this one. Which moment during your tenure best reflects the values and culture of Infosys? Thank you.
Okay, there was a few, so I'll start. We see that, the large deals, we see a good traction of those. The values over the last few quarters have been strong. This quarter was pretty good. We see the pipeline to be pretty good on the large deals, and we feel there's a benefit of the consolidation that we are seeing in some of the large deals, which is definitely helping us as we go through it. The conversion, whether it's faster or slow, it's more, I think it's at the same type of a level, and we will convert those into revenue. With 61% net new, it already looks pretty strong in terms of the net new work, which we'll see. And obviously, the renewals are going pretty okay as well there. On AI, I think there's a huge differentiation that I find from what we are sort of working on. First, we have a very clear AI strategy with the 6 areas of focus. We are investing in it. We've actually taken, and Jayesh has shared in the past, he'll share also today, we have invested in building out AI capability. We have, as I shared earlier, 8% revenue growing double digit Q on Q over the last several quarters. We have a good pipeline in that area. Then you look at some of the stats, we have 80,000 people working on the tools today for client work. It's not just training and so on. Then what we built with Fabric, I feel, is very differentiated because it allows clients to maintain control of their data, maintain control of what they want to do with the AI, and still use the different models, use lower costs. We have a harness through which they can leverage what they want to achieve with the foundation model. So that is a significant move up in terms of differentiation that we've seen. I think in terms of values, my sense has always been Infosys has incredible values, and it's really been sort of a privilege to be associated with that and learn from it and contribute to it. So in many ways, it's a great sort of fortunate thing that could happen in the way that it has happened.
Thank you. The next question is from Shilpa Phadnis from the Times of India.
Can you please give us some color on how your GCC portfolio is doing? Because some of your peers who are slightly late starters are catching up. They're already looking at $1 billion in revenue run rate. So I just wanted to understand from you how it's doing. I mean, is there a milestone that you've touched? And secondly, there's also concern with Vanguard and Daimler, and a lot of other companies are chipping into the space. They're setting up their own GCCs. How much of that compression are you seeing in the market?
So on GCC, in fact, my sense is you might have seen we launched the a AI GCC concept some time ago, and that we had a client event a few months ago where all the leading GCCs of the country, their leadership teams were here in Bangalore on our campus, and we did a one-day session sharing with them what the latest developments were in overall and also in the AI GCC. So our traction on GCC is looking very strong. We don't externally share the milestone, but our revenue growth is good. Our work with them is good. In the GCC,
well, big developments at Infosys. In fact, the board has made the announcement of appointing Ashiss Dash as the new CEO and MD. He's going to be taking over from Salil Parekh, the outgoing CEO of the company, in 2027. In fact, Parekh says that AI revenue is growing quickly despite some quarter-on-quarter fluctuations. But on that note, ladies